Hi, good afternoon, everyone, and welcome to this week's episode of Red Couch Talk. Today we have Jorge Merlos with Integrity Home Finance joining us. Thank you.
Thank you for having us.
Thank you for being here.
So let me ask you, Jorge, how long have you been in the business and what changes have you seen since you started?
Well, I've been in the industry, I would say, a very long time. But first of all, before I say how long I've been in the business, I just wanted to thank you guys for having us, for being here. And so, to answer your question, I've been in the industry for about 17 years.
17?
Yeah, we got 10 years old, man.
Yeah, you know what? Yeah, I actually started the summer of when I was 17 years old. So when I was in high school is when I started, and I've been doing it ever since. It's the only thing that I've done for the last 17 years. As far as changes are concerned, I mean, I've certainly seen a lot of changes. I've seen appraisal packages with pictures glued to them, like hand delivered. I mean, I've certainly seen that. I've seen lending guidelines where you can be breathing on the other end of the phone and you got a loan, and obviously now where a lot of clients are doing down payment assistance programs or different programs to help qualify for their properties. So certainly I've seen a lot of changes in the industry throughout the last 17 years of originating mortgages.
Wow, that's great. And what is your take on the next crash, and us as homeowners, how should we prepare for that?
Sure, so it's something that's a cycle, right? We understand that real estate is a cycle. It's something that goes up and down. We understand that the last cycle was about 10 years ago. So in the media, there's a lot of news and a lot of speculation that property prices are going to decrease, property prices are going to crash. And so the biggest difference that I would say from a lender standpoint and looking at the data is that the loans that were originated, let's say in 2006, 2007, were adjustable rate mortgages, and income was not verified. So that crash happened because people couldn't afford it to begin with, and then the payment went up $200, $300, or $600, sometimes $1,000 a month. And it would go up incrementally. Now, that was coupled with the fact that we have a global economy. Different countries, went kaput, right? And we really didn't understand the mortgage-backed security system and how mortgage-backed securities work. So with keeping that in mind, I would say that the next potential crash is not necessarily a crash, but more than anything, a potential recession. So when you look at economic indicators are bottoming out of unemployment. I would say that would happen maybe a couple months ago, maybe about 3.7%. I would say that it's something that it's in the horizon within the next 24 to 36 months. It's a potential recession, not necessarily a real estate crash. Real estate prices may begin to decrease or just soften up, but it's always a great time to buy, and there's always a great time to make money in real estate. So it's not a matter of when it's the right time to buy, it's more you buy and you wait, right? You buy and you wait. So traditionally mortgages or traditionally homes in California are appreciating anywhere from 5 to 8%. We understand that California is one of the most expensive places to live in. Right? I mean, look at gas prices. I'm on my Patamobile. That's how I got here. So sorry I'm late.
But you rode the bus over here,
but look at all the beautiful things we have being out here in California.
Exactly. I mean, it's the fifth largest economy in the world. So it's the fifth largest economy in the world, and why not buy real estate? They're not making any more land. So, if you really want to set yourself up for financial freedom, you certainly have to own real estate. And so it's just understanding the dynamics behind it, getting together with a great group of agents that are going to give you the right advice when you're purchasing your home, like RE/MAX champions in downtown.
I was waiting for that.
Right? Or like a lending team like ourselves, the Mike Barrios team at Integrity Home Finance, and just making sure you're getting the right advice. Whether you're investing, you may want to wait, right? If you're investing to actually flip a property, but if you're investing to live in a home, the interest rate on rent is 100%, right? So you're always putting that money into somebody else's pocket. So it's not a matter of whether it's going to crash or it's not going to crash. We understand that there's cycles, and we also understand that real estate is going to continue to appreciate.
And then just take over on that. It's just I think that a lot of people they see something in the newspaper or on Facebook, and all of a sudden they're like,
they get a little freaked out.
Crash, or you know, we get a lot of buyers who tell us, oh, well, you know, I want to wait for the next crash. So we're like, you know what, then, you know, you're going to be renting for a very long time.
Yeah.
Well, you know what? A lot of people were burned, you know, quote unquote, burned in 2006, let's say to 2008, or even before that.
Yeah.
And so there's that they got burned once, they don't want to get burned again, right? And so a lot of the baby boomers that, or you know, people before then that went through the Great Depression, have a certain way of purchasing items, have a certain way of doing their finances. Just like millennials now saw their parents go through what they went through,
Yeah.
because they were, let's say, like in their teens, and parents were losing their houses.
Yeah, like moving out.
They don't want to lose that again. A lot of them right now can't purchase because of student loans. So there's a lot of fear, and I think we would all agree that bad news travels fast,
Yes.
and good news doesn't.
Doesn't, that's
So
true.
the media will look at clickbait. So there's certain articles that I've seen where they say real estate prices drop, and it's like the main article. You read through the body of the email, and it'll say, you know, 10 out of the last, let's say, 15 counties that they analyze actually had appreciation. So then why is the main subject line real estate prices are decreasing?
Yes.
Because people are going to click on it.
Yeah.
Right.
So
Rapper.
Yeah.
make sure, I would say just an advice is just make sure you talk to a professional, talk to somebody who's doing this full time. Don't talk, you know, just my advice, I would say to a part-time agent, part-time loan officer, someone who does this day in and day out, you know, and can give you facts.
Right.
Facts,
Right.
numbers.
Right.
You know, emotion, there's a lot of emotion when you're buying a home, but you actually want facts when you're
Yes,
making that decision.
absolutely.
Numbers don't lie.
Got that? Numbers don't lie.
And
They're black and white.
Yeah, and we always try to educate our community because it's always better to buy than to rent. You know,
Absolutely.
they end up paying their landlord's mortgage, so that's what we
Correct.
tell them.
Yes.
100%.
Or investments, you know, we tell people there's a certain price per door that you need to look into when you're looking for an investment property, 4 units, 5 units, 10 units, and so forth.
Absolutely.
Yeah, but now let me ask you this. Now, what advice would you give a new agent that's coming into the business? You know, they're seeing everything that's going on, the same thing, like they're reading all the articles. They may be in fear of saying, okay, should I get into real estate, should I not? What kind of advice do you give one of those agents?
Absolutely. I mean, I can give them a lot of advice. But you want to have a database. You want to have a database. So that's one of the biggest things, you know, in our business that newer agents that I talk to, or seasoned agents that I talk to, they don't have a database. You know, they have either index cards, and I mean, that could be a form of a database, or they have folders where they're always running around with their folders. But if you have a centralized location where you have your database, you have your clients' birthdays, you have important things to be able to connect with people. I think that would be one of the biggest things that, you know, my partner Mike has really instilled in us is our database. We communicate and contact our clients periodically, and it really helps to build that relationship, right? The way to guarantee your future is by relationships, not by buying leads, not by buying ads, but by building genuine relationships where you can provide value to your clients and your sphere of influence. So number one is that. And then number two, I would say it's not, when I was 17, I was having a rough day, and I was in the parking lot. I don't know what it was, but I was in the parking lot a little frustrated, not really knowing what's going on. And the broker at the time asked me, you know, hey George, what's going on? I explained it to him, and he said, you know what, the day that you accept that this is just another day in real estate and you move on is the day that you're going to find success in real estate. It's really, we attach too much to the outcome,
Yes.
right? And so
Right, we do.
if you're treating your clients right, you're doing the right things, you're waking up at the right time, you have a schedule, you have your database, it's going to continue, it's going to flow. Sometimes there's good days, sometimes there's bad days, and that's just life.
Yeah.
Life,
So
yeah.
don't get attached to the outcome.
Yeah.
That would be the second piece of advice I would have for
Very true,
agents.
very true.
Wow,
I
that's
had
some
a-
great advice there.
I had a previous broker that I worked with. He told me, you know, if you treat your clients right, the money will come.
Yeah,
it's
absolutely,
It's always going to be
absolutely.
The client. It's always, you know, don't worry about, like, I try not to get too involved, but sometimes we do. As real estate agents, as loan officers, we kind of get, you know, into that deal, and we're like, come on, man, you know, why? You know, so
Yeah.
I understand, but yeah, sometimes we have to take a step back and be like,
We want to find a way to make
Yeah.
it work. We want to help the families. We want to get them into their home, but sometimes
Sometimes
the
you just
pieces of the puzzle don't
Don't
fit.
fit
Yeah,
at the
just
moment.
can't.
And there's nothing wrong with that. You
Yeah.
did your best.
Yeah.
So,
Yeah. Now, let's talk a little bit about interest rates.
Mm-hmm.
Do you see them going up anytime soon? And we're very impressed with you. So,
Oh, thank
we
you.
are hiring. So,
Come on, Lord.
yeah, hey guys, they're hiring downtown West Covina, Remax champions.
we're hiring.
Yeah, so I mean, like honestly, to answer your question, as far as interest rates, they were a little bit higher towards the end of last year. They actually went down earlier this year, and right now, I'd say they're. One thing that I can explain is that interest rates change several times a day, by the way. So they change all the time, and it's really a matter of price. Now, interest rates right now, they're in the high 3s, maybe low 4s on most programs, conventional or FHA. If you're looking at down payment assistance programs, you're probably from a 4.25% to a 6%, depending on the program. So interest rates are still historically low. I remember as a 17 or 18-year-old offering interest rates at an 8%. Offering interest rates at a 13%. So, you know,
My
so
first house was
someone,
9.
again, you know, someone who says, hey, a 4.25% is too high, well, so is 100% of your rent
Yeah.
and interest that you're paying. So, and it's relative since you actually get a tax deduction, right? So if you're paying 4.25%, your after tax rate margin that you're actually paying is maybe 3.25%, right? So as far as interest rates, they're historically low. I don't see them climbing right now with any economic reports. GDP just came out. Once you take out inventory through GDP, that's why interest rates are actually right now a little bit better than where they should be. Now, if there is a recession, you know, we talked about that, which I think there will be, and you know, the chances are that it's going to happen within those couple months. One of the things that the Federal Reserve will do to stimulate the economy is drop interest rates. Right? So that's certainly something that could be in the horizon if that happens as well.
Perfect. Oh, you. Thanks.
Yeah. Well, George, I know that just like I do, we have a heart for some special charity events, you know, and I know that you have a heart for the Children's Foundation of America.
Absolutely.
How did that come about?
So I participate with the West End Real Estate Professionals out in Rancho Cucamonga. It's an organization of real estate professionals that meet every Friday at 8:15 in the morning. And it's just an educational piece. There's someone that comes up there, gives information. And so being involved with this organization and the events that they put together, something that like really touches me is just giving back to kids, the ones that really can't do anything for themselves, right? And so the Children's Foundation of America helps kids, foster kids. You know, it's about 400,000 kids a year that don't have a home. You know, and so
A lot of kids.
what we want to do is we want to give back. We want to give back to them. We make a lot of money. I want to say we make a lot of money in real estate. We're in this business, you know. We make a lot of money, okay? It's a business that treats us well. It's a business that allows us to provide freedom to our families.
Yes.
And I want to give back to the communities that we serve, and so I want to give back to the kids. And so the Children's Foundation of America is something that I really want to help out and push out there.
Oh, wow, that's wonderful. I applaud you for that.
Thank you.
Thank you. Yeah.
And I know that your event is tomorrow. So do you want to give us a little bit of information on that?
Tomorrow.
Tomorrow.
Buy
your
tickets. We rep WRE. Hold on. WEREP. We rep. All right. WeRep.org/tickets. Tickets for realtors are only $10. For affiliates, anybody in the industry, it's $20. The Laker girls are coming out, taking pictures, signing autographs.
Awesome.
We're going to have a DJ. Yeah, get your tickets. Get your tickets. So we're going to have a DJ there. My friend Luis Vasquez, thank you, Luis, for coming out and doing that for us. We're going to have a DJ there with music. We're going to have a lot of raffle prizes. Thank you guys for being a sponsor. They're one of our sponsors.
Absolutely.
So it's just a great event. We just want to bring the community together of industry professionals giving back. So Rock and Brews in Rancho Cucamonga tomorrow from 5 to 8.
Yeah, and thank you so much for allowing us to be involved with that. We really appreciate it.
Thank you.
And once
Thank
again,
you.
we thank you so much for
thank
joining
you so
us here
much.
on Red Couch.
Thank you guys
Really
for
appreciate
having me. You guys are doing great things, and I really appreciate you guys for giving us the opportunity to come out and just give your audience some information.
Thank you.
Thank you.
Yeah, thank you for your support. Yeah, we know you
course.
support us a lot on a lot of things. So
Yes,
we
thank
really
you.
appreciate
We
it.
really
Thank you.
appreciate,
Yes.
Of course.
Well, if there's any agents out there looking for a new office, please give us a call or comment below. We would love to talk to you. Or any buyers or sellers out there looking to buy or sell or even refinance, please give us a call. What is our number, Alex?
The number is 1-800-286-1036. And don't forget to like, share, and subscribe to our YouTube channel on our weekly drawings on this episode and future episodes of Red Couch Talk.
Thank you very much, and we look forward to having you join us next week here at Remax Champions, downtown West Covina. Woo!